The following program is brought to you by the Midas Gold Group.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Dino. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Ken, first of all, it's always good to be back with you.
Hey, Dave, it's always a pleasure to talk to you.
I want to do a quick review of where we are this week, and I want to go back to what we say in our introduction, because we talk about giving a realistic weekly perspective on the state of the economy. And more than most people, you have your fingers on the pulse beat of the economy. Where do you see our economy at this point?
I would say on the verge of chaotic. I mean, we have a problem with inflation that's not going away at all. This is a intricate system of supply chain and everything, and a lot has been built up over the past few decades, and now it's all coming apart. So this is a huge problem. People are very speculative when it comes to the markets, Dave. A lot of speculation, a lot of gambling. I think the Avis stock today, Avis Cars, went up by more than double in just a day from 190 to 300. So that's the kind of speculation that we're seeing, a lot of gambling, a lot of uneasiness about the economy, and the numbers that are coming out are not good. So, well, it's going to be very interesting to see how all of this plays out, and we're going to get a little bit more into that into today's show.
The topic is specifically booms that eventually wiped out many stock market booms, which many say we are experiencing right now. So where do we begin with this?
Well, we are experiencing that right now, Dave. I mean, the stock market move in the last 10 years since the last financial crisis has been unbelievably remarkable. And it is what it is. And the point that you and I have been making for years is if you are lucky enough to take advantage of whatever's gone on through debt, through good business models, through luck, great. Protect some of it. You know, the stock market, Dave, could make you rich, but more than likely, if you put all your wealth into the stock market, eventually in a bad time when the bubble bursts, it's going to bust you out. Gold is wealth preservation. You know, the United States, Dave, in the last 10 years has seen on record huge stock market equity moves.
Mm-hmm.
This could be as good as it will ever be. You know, when we've seen moves in these big tech stocks, outrageous moves, but it is what it is. What people have to realize is a lot of this move in the last 10 years has been because of debt. We have more corporate debt, government and consumer debt, Dave, than ever in history. We have the bubble of all bubbles. And eventually this debt, which we're starting to see come apart in China and different parts of the world, this will implode. And it's up to the people to protect what they've made. That's the point of today's show. Protect what you've made before it disappears. You could lose your wealth in a blink of an eye, and gold is a way to preserve that. And we're going to talk more about that today as usual.
You're listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is booms that eventually wiped out many. Ken, we're going to look at three market booms that went from booms to bust today, and we're going to compare that to the value of gold. I think this is really putting precious metals to the test. The first, and obviously the most obvious, is the crash of 29. Tell us about that.
Yeah, and let's talk about the main premise today. Our premise is we are in a boom, and it will go bust. So that's the main thing that should people put them on alert. Now, the famous stock market crash in 1929, everybody has heard about it, wiped out billions of dollars of wealth. It basically brought in the Great Depression. Now, That fateful day in October of 1929, Dave, was known as Black Thursday.
Mm.
The crash was preceded by a period of phenomenal growth and speculative expansion. Sounds familiar.
Yeah.
Yeah, not unlike what we're seeing today. All right, now let's
Mhm.
think about this. The Dow before the crash rallied 600% from 1921 to 1929. You know, the roaring 20s.
Yeah.
Everybody's seen the pictures of people dancing and whatnot. But some of the stocks of that period, remember we were talking about same game, different players.
Mhm.
RCA, Union Carbide, AT&T, Allied Chemical, American Can. I don't know if we have any listeners that remember any of these names, but list goes on and on. Now the Dow peaked at 381 in 1929. It didn't reach that peak again until 1954. Now let's repeat that. 25 years, Dave, for that peak to go through a trough and then back to the peak. Now,
Wow.
most people can't wait 25 years to get back to peak levels. Now, today, we're near peak levels. Market could go a little higher, but we are near peak levels. Now, from the
Wow.
top of the market, Dave, in 29 to the bottom was a drop of 89%.
Whoa.
89, 89. So that means that not everybody has the kind of wallet for that kind of drop. Not everybody has the stomach or the years to go through that. 25 years to reach that peak again.
Wow. What happened to gold when the market collapsed?
Well, that's a good question and very important of what we're talking about today. Now, gold was pegged in 1929 at $20.67. So during that whole entire crash of 89% drop in stocks where most people were wiped out, we've seen the movies, we've seen the stories, we've seen the pictures. If you put a substantial part of your money into gold before that happens, you didn't lose a penny.
Mm.
Gold did its job, Dave. It stayed pegged at $20.67. And as wealth preservation, gold succeeded.
Wow. You're listening to the Gold Standard with Ken Russo from Midas Gold Group. Today, our topic is booms that eventually wiped out many. Ken, 1929 does seem so long ago, and it's very hard sometimes to relate to what happened back then. We also like to believe, that we're a whole lot smarter now than then. And, that safeguards have been built into the system to keep that from occurring. What do you think?
I'd have to say hogwash. I would say it's the same game, different players. The only thing is that there's more speculation today, more than ever. The numbers are bigger than ever. More free money floating around out there. I guess you would say more fuel for the fire. So I don't see anything different today than we've seen many times in the past. I mean, we've seen speculative stock market moves all the way back to the 1700s. I mean, people are bettors. They speculate, they gamble. I would say today's bubble is even bigger than where we were before the crash in 1987, which is shocking but true.
Let's talk about 1987 and the crash there. Tell us more about that. What led to that?
Once again, the stock market had a big move for the prior few years, but back then, the group of winning stocks was called the Nifty 50.
Mm.
Okay, which was a group of 50 stocks, Dave, identified by market commentators. Stocks that you should never get rid of. These are the ones that you hold on to forever. The same old stuff that we hear today. These included Revlon, Procter and Gamble, Philip Morris, Pepsi, Pfizer, Merck, Eli Lilly, Coca-Cola, IBM, Walmart, Disney, and yes, a lot of those companies have
Eastman
done very
Kodak.
well
I
today.
saw in there Eastman Kodak and
Yeah,
Polaroid. Yeah, good luck on those.
yeah, those didn't do too well. So as you can see, and one of the interesting things about the Dow Jones is they kind of take the losers out and then they put a new one in there. So it's kind of skewed like everything else. But the fact of the matter is that the market went on a huge run before 1987, and a lot of people made money. Okay, but by the early 70s, these highest rated companies. They had stunning valuations, maybe 70, 100 times earnings, much like
Mm.
we see today, where we had overvaluation eventually take over. Many of these stocks had very poor performance for decades after the crash of of 87 and during the 70s. Now, during the 70s, we had the fiat currency experiment where the dollar was taken off the gold standard for the first time in history. So we had a full paper currency fiat market. Obviously, a lot of speculation, a lot of excesses. Economic growth had slowed, so they had to pump the economy up through money printing. This is kind of where everything started, and we've been doing this for 50 years now, 50 years of fuel. So the stock market and the economy were kind of diverging. You know, the stock market was going up and up and up and up, but the economy was just kind of barely hanging on, kind of be resuscitated. Very similar to today. Listen to what we just said. The market keeps going up and up and up, but the economy was kind of stagnating and it needed stimulus. So for the first time in a long time, valuations climbed, Dave, to excessive levels. So we reached a point where in 1987, it kind of all came together, and that's what we're talking about today. Are we close to things coming together? And I would alert the audience that we feel yes.
The Dow fell quite a bit. It fell 23% from 2,246 down to 1,738. The loss of liquidity from this crash led to the savings and loan crisis of 1989. And again, not everyone had, as you indicate, the wallet or the stomach for that kind of a drop. I mean, it was an ominous warning of what we are going to continue to look at in just a few moments. First, though, again, the question, what happened to gold when the market collapsed in 87?
The stock market tripled before 1987, but the Dow Jones in October of 1987 fell close to 30% in total, okay, where most people were wiped out. But gold during that time, in October to November of 1987, actually traded up 2%. Wow. So during that horrific month for stocks in 1987, where most people lost 30, 40, 50%, some people lost everything, and never recovered. We don't hear too much about those stories. Well, I lost everything and I never recovered, but they're out there. Gold did its job in 1987. It did act, Dave, as wealth preservation, which is exactly what it does.
A reminder here that you're listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is booms that eventually wiped out many. And in a few moments, we're going to take a look at a specific gold product that can add to your secure wealth.
I'm here with Midas Gold Group's senior trader and Marine Corps veteran, James Clark. James, why are people investing in gold and silver?
Well, Dr. Gorka, the Federal Reserve supplies money to pay for congressional spending. As Congress expands spending, the Fed has no choice but to keep printing money at an accelerated rate. This causes the dollar to fall and gold to increase.
So as the Fed and Congress devalue the dollar, what can people do?
As the nation's #1 veteran-owned precious metals dealer, we offer diversification strategies in the form of precious metals. As Congress looks to the Fed for more money, investors look to gold and silver to protect their nest egg.
And I recommend that you look to Midas Gold Group for all your precious metal needs. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino. Our topic today is booms that eventually wiped out many. By the way, if you live in the Los Angeles or Phoenix area, we encourage you to visit our local office to meet with us in person. We'd love that. For the address and directions, just log on to our website, MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. And for those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. Now let's change course and let's look at a specific gold product that I really like having in my collection. One of my very first pieces in my collection, the Gold American Eagle.
It's the preferred government-issued bullion coin of American investors, and it's the main coin of the U.S. Mint. And believe it or not, the U.S. Mint is a very high-quality mint. So the government could actually do something right. They actually have a good mint.
It's a full 1 ounce coin, and it actually, as you've told me, can boast the title as being the most popular gold coin in the world.
Yeah, I would say so. Very liquid. It was first authorized by Congress in '85. It was an instant smash, reaching iconic status almost overnight. It's just as popular today. It does come in fractional sizes. We actually have some right now at Midas Gold Group, half ounce, quarter ounce, 10th ounce, but the 1 ounce size is the most common. It's not minted in huge numbers, but you will see hundreds of thousands of these coins produced in a year, where the demand is even stronger than that. And there is a shortage, people, in some of these gold products. The supply chain reaches more than just steak and fish. It is reaching out to a lot of things, even gold, and we'll talk about that a little bit more in another show. So the mintage rate of these coins is pretty moderate. It's reasonable, and it's a great coin. It's a terrific coin.
It's also, I think you've told me, it's IRA eligible, adding to the security of a person's investment.
Yeah, you could own this coin with cash or liquid funds, but also if you have an old 401k or an old retirement account or an existing traditional or a Roth IRA, you can convert those funds and use those funds to purchase gold eagles inside of your IRA. And remember, Dave, this is a 22 karat gold coin. It's extremely durable. They came out this year with a new revision, so to speak, where the back was changed. So there's a Type 1 gold eagle, and there's actually a Type 2, which just basically means that the back is a little bit different. But it's a great coin. It weighs a little bit over 1 troy ounce. Like I said, it's a little bit of a browner color gold because it is 22 carats. So you still have a full ounce of gold, but there's some other alloys in there, which makes the American Gold Eagle very unique, especially the color. It's a very unique coin. It's a foundational product. I would encourage anybody that's looking for wealth preservation, Dave, through a coin. And remember, folks, the coins do appreciate more in a good market than, say, a bar. So it's worth a little extra money for the Gold Eagle. It's a great coin. You can be really proud of it. And when we're protecting our nest egg, shouldn't we be proud of what we've accomplished, Dave? We should be proud of our products that we own. And this would be a product that I would recommend people really consider right now for wealth preservation, the 1 ounce gold American Eagle.
You're listening to The Gold Standard with Ken Russo from Midas Gold Group. And today our topic is booms that eventually wiped out many. And we're going to continue in just a moment.
Dr. Sebastian Gorka here. Part of the so-called Great Reset from the multinational elite is to enact a digital wallet currency. Think of the implications. Time to create your own gold standard with a call to the dealer I do business with, veteran-owned Midas Gold Group, the America-first precious metals experts who can help you with IRAs and more. Get your portfolio reset with gold and silver. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we continue now with The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino. If you live in the Los Angeles or Phoenix area, we would love to see you visit our local office and come meet with us in person. The address and directions are available on our website, MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. And for those listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. We're talking with Ken Russo, Senior Vice President at Midas Gold Group, and today our program is about booms that eventually wiped out many. We only have a few moments left, but I want to talk about, after looking at 29 and 87, the ruinous dot-com bust of 2002. Give us a real thumbnail sketch of that.
Yeah, and remember, Dave, we can do business over the phone in all 50 states through FedEx or UPS insured. So we're based on where you live. Don't worry about it. Just give us a call and we can get you some wealth preservation. But yes, the stock market .com boom in the late 90s could be and should be familiar to a lot of people nowadays. Between 95 and 2000, the NASDAQ rose about 400%, only to give up about 80% of those gains by
Wow.
2002. Now, once again, a huge run up, just like the last 10 years, a huge run up after a financial collapse in 2008, the subprime crisis. So many similar characteristics here. Like I said, same game, different player, but the bubble is inflated and it's big. Now, at that time, everything was online. Pets.com, Webvan, Boo, WorldCom, Northpoint, Global Crossing. Now, these were all big stocks. They also have something else in common. They all went bust, which is interesting. So we had a lot of speculation, people throwing money at everything, very similar to today. Companies that survived, like Amazon, Cisco, Qualcomm, some of them gave up 90% of their gains in 2000 and 2001, Dave.
Wow.
So, yeah, it was a huge run up. A lot of people got rich, but a lot of people lost it all. Once again, speculation could make you rich. Speculation can bankrupt you. Gold will keep you rich. We're talking about wealth preservation. The question is, how do you protect what you've made the last 10 or 12 years? But the bottom line, a lot of those NASDAQ companies went out of business. A lot of people lost money. It took 15 years, Dave, from 2000 to 2015 for NASDAQ to regain that peak. Not everybody has 15, 20, 25 years to wait. And we've seen that's not uncommon. Actually, it's very common.
What happened to the price of gold during the crash in 2002?
Well, that's a great question. Gold was around 280 in late 99 and 2000. And by 2002, gold was about 320. So during this time, once again, gold showed how to protect your fortunes, how to protect your nest egg, and it acted again as wealth preservation. So gold again in 29, 87, and in the dot-com crash of 2000 acted exactly as it's supposed to, and it preserved your wealth. And we would encourage people today to realize that history does repeat itself. We are very extended. The stock market is very high. Consider wealth preservation. Give us a call, and we could explain to you how gold could help you sidestep the next financial crisis, which, Dave, unfortunately, is on its way.
Ken, I gotta say, I really am thankful to have a part of my wealth in gold from Midas Gold Group. That is so reassuring, and I really feel that no matter what happens to our economy, no matter what happens to the value of the dollar because of unstable or alarming world events or runaway inflation that we've talked about before, no matter how intrusive the government becomes in my private financial affairs, I have the solid value of gold protecting my family, and I'm really happy about that. And that's going to bring us to the end of our time together today here on The Gold Standard with Ken Russo, brought to you by Midas Gold Group. A reminder, opinions given are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD, 855-322-GOLD. Ken, thank you again for your time today.
Yeah, Dave, and I just want to remind people, this country right now is headed in the wrong direction in every single possible way, led by the wrong people. But that doesn't mean you can't protect what you have. So Nice being with you today, Dave, and talk to you soon.
Yes, indeed. I'm Dave Dino. Come and join us again next week at this same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.